Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for stopping by. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's specifically about day trading. However, you can take these processes that I share and trade any instrument and in any time frame. It doesn't matter how long you've been trading, what you've been doing. What is important is that you have some experience and you're in a situation that we all have gone through. And that situation is random winners and trying to make it better. And most of us think because we have winners, the process to sustainability is just fix it, make it better. It's so logical. But it's not about the random winners. In fact, the random winners are actually the catch 22 of this business, or I named it for myself many years ago, Trader Groundhog Day. Random winners, many winners, profitable days, profitable weeks, profitable months, but over time, not moving the ball forward, not being able to create a consistent process. And the randomness put me on, personally, this path of making it better, tuning, tweaking. And over time, what I did, now this is many, many, many years ago. I've been trading 47 years. So many years ago, I started in 1980, so there was no information. Eventually, what I did is I built trading systems to trying to solve the problem. I thought optimization and system building would actually fix it, right? It didn't. And I learned so much from that experience. So I'm here in the TraderLab to share my experience with you. None of what I do might be appropriate for you. But I found I had to do the opposite of what I believed trading was because I didn't understand trading. I was trying to make trading fit my comfort. That is predictability, risk avoidance, squeeze risk out. And all those decisions were made based on psychological or emotional triggers, not the actual business. So TraderLab exists to help you learn the business, create plans, potentially create sustainability or career path. And it's definitely not for everybody. This is going to challenge you beyond your imagination because you've never been in an alien environment. This environment is the exact opposite of what our psychology drives us towards. Our psychology drives us towards safety, avoidance of risk. And your psychological processes cannot differentiate between a trade and the uncertainty and randomness and a saber-toothed tiger. So on that basis, we have to construct solutions that can accommodate our fear. And the way to accommodate your fear is something tangible, and it's called statistics. And it's the boring part of the business, but it's more about sustainability, isn't it, than just excitement, dopamine fix, and getting those occasional or even many winners. But still, put yourself out of business. That's the Trader Lab. That's what it's about. It's a community of like-minded traders who come together to leverage their collective experience. Doesn't matter how long you've been trading, what you do, how you do it. What matters is if you're waking up a Trader Groundhog Day, it might be time to break that cycle. So let's go on. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. We get there, we talk, right? So let's move on. Now, thanks, William. Appreciate that. How we doing? I guess we're okay in Discord. Now, remember, I share 60 PDFs of structured trades. These are available to everyone in the TraderLab. There's no cost for TraderLab. There's a link in the bottom of YouTube. You do have to confirm your Discord. Make sure you're not a spamulator, and you're all welcome to these. Now, again, not mechanical. Says it right there. No plug and play. If it was plug and play, we all would have done it already. Certainly, I would have. And it's not. So plug and play, and even do what Tom does is not the answer for you. Learn what Tom does and then adjust it to your psychology and the time frame you operate in. You can replicate a process, but you cannot imitate. You can replicate but not imitate. What does process. Process is learning the business of trading, how markets work, why they do what they do, how you might get in alignment with it. Write this down, take some notes, watch these streams. They all build on each other. Now let's get into today. I think we might agree we have now moved into a potential bear market. Now you can, whatever you want to think, that's fine. It's not my business, it's yours. But if I think that the higher time frame trend is down, that allows me in my plan to anticipate certain behavior. Now let's go to the higher time frame. I want to go fast. It's very hard for me to do this because I really would prefer to just show you trades as they develop, right? Remember, and this was too high. And all these principles, auction market theory, how to use the volume profile, they're all in the TraderLab. And there's also literature out there in internet world and elsewhere on market mechanics. Now, what I do is not necessarily what's in the books. Like you, I read a book and then I take any input and I take it as truth. But what I found was it's not true for me. I had to take concepts and build my own out of them, evolve in understanding and differentiate what I do from other traders. And over time, with a lot of pain, of course, and waking up with Trader Groundhog Day, I learned. And what I learned is to begin to think for myself and not be in a rigid process that somebody else told me was the right thing to do. What else are you going to do when you start? You guys go to influencers, chat rooms, who knows, and tweets, I don't even know, Instagram, and then you go, oh, this guy made blank, I'm going to do what he does. Unfortunately, guys, it doesn't work that way. So that's what you're doing. Time to take we might say, a deep breath, time out. So this is too high. If I find too high, and these are high volume areas, think shopping, this is too high, where am I going? I'm out of here, I'm driving away. Well, this level here, right here, is notice what happens here. When I break below it, notice where now higher time frame, to me, resistance is here. So we get our gap, just follow the rationale. And we come down here on Friday, we closed on the low. Oh, and I always like to think about the humanity of it all. It's the end of the planet. We're out of here. However, let's look at market mechanics. And you need to understand this because you need to think like a retail trader. Anticipate your emotional triggers and behaviors of what you perceive to be certain in an environment that's completely uncertain. So if we can anticipate retail traders who look for certainty and risk avoidance, we can also anticipate what might happen to them because of their failure rate. So what happens here? Right here, I get my longs in here. Don't forget, I already tested this. I come outside of a key location, by the way, out here. And now I have what? Longs in the market. What do I have here? Longs in the market. What happens to them? Thanks for playing. They get blown out. I open lower. Now I have more shorts, and I got shorts here, and wherever, right? Well, if I get the shorts trapped and now I get my buyers, what happens? Well, don't forget, this is my key level. I open here. I test the high volume in here. In other words, this is the retail price. We found too high up here, which in the ETH, by the way, this was the high. What does it say? Language of the market. I'm not paying that. I'm out of here. Okay, now the shorts are in here and they get squeezed. Where are my buy stops? In here. Look at the rationale. So what happens to we get continuation buyers going to the moon, Alice, except our sellers come in, and what happens to our longs? The longs in here and the longs in here. Hasta la vista, thanks for playing. They get a coupon to the buffet. Now watch, we come in, this is Friday. What's in the condition of the market? Short, short, short. End of the world. What happens? Gap. Where's my stops? Here, here, and where's my gap fill? There. Now what? I fill the gap. I take the weak shorts out. Now what? Hasta la vista. Thanks for playing. Now time to get short. And now this is, I believe, 2 days ago. This set up the short scenario. Now 55 was a key level. Watch now. This is auction market theory. This is the basis of market mechanics. The other side of market mechanics is understanding there's both sides. Watch. I'm going to try to do this, and then I'm going to run as fast as I can. I feel like I'm in a marathon here. So what do? We gap. Now, there's no precision in this thing. You know, this is sort of like, I always like to use the term horseshoes and hand grenades. This was the potential target on this day, and it didn't mean it was going to do it then. It's a target. And this is high volume in an intermediate time frame. Multiple time frames, don't worry about it. If I open lower and this is too high, then what was recently too low? Last time we were here, this yellow line. So here, and where are stops? Under here. And what was our target? Watch. I have two levels, 44.25 and 14.25. Now, let's go to today, and then I'm going to get into the actual trades. 14.25 target. Now, no clue. Don't worry about it. And what's this? The gap. Now, I'm going to take you to one more concept, and it's the same thing I'm showing you right here. Market goes up to go down, market goes down to go up, market goes up to go down, because it's always rolling over both sides. And where's the fuel? I call it fuel. Years ago, I built a trading system specifically for trading this way. I won't go into it too much, except I was always getting stopped out early on. How about you? Well, at one point, or at some point, and I can't remember when, I built a system that traded to the stops. And the reason I built it was I figured out that if I have shorts, I got buyers in here. If I understand where the buyers are, the stops, then I'm going to trade into the stops because I need those buyers. If I get longs in here today and the trend in the higher time frame is down, here's my choices. I can sell it, anticipating the squeeze, and we'll talk about that because my plan for today was primarily shorts, anticipating short squeeze, using the squeeze for continuation shorts. Other traders are going to take longs. There's not a right or wrong, you say. You're going to say, what's the right thing to do? Here's the right thing to do. Would you like to know? It's very simple. The right thing to do is have a plan that has a statistical edge, no matter which way you're trading. Long, short, stand on your head. Doesn't matter. Your job is to wait for the trades, identify the alignment that has a statistical edge in your time frame, and then, as they say, act accordingly. What is the time frame in the higher time frame? I don't think it's a bull market. So let's start with that. If the higher time frame is down, how do individual traders potentially craft a trade plan for it? Two ways to think of it. You can trade either side, but let's try to classify what is a counter trend trade and what is an aligned trade. That's one part. The other part is intraday, you're going to have the same exact behavior. So anyway, 14.25 was a target. Who knew? And it is possible, just saying, that we either have the low of the day in, and personally, I don't think so, but that doesn't matter. Notice what I said. I don't think so, but here's the other part. I don't know. If I don't know, then what do I need to know? I need to know where my trades show up. I need to act accordingly per my plan. And I need to accept the randomness because I have no idea. What about you? Do we need to have an idea? Now, I'm going to talk about structured trades. Let's remember what we have. Statistical probabilities. So here's something that most traders do not understand. Let's start with the condition of the market. Bearish. What did it do yesterday? Went down. What's happening? What's the condition of the market? It's short. What do we anticipate? Continue. Two possibilities. One, if we open lower, which we are in a gap, we can anticipate something called short covering or Gee, a gap. Thank you for the gift. Cash, convert, cover. That's called responsive buying. They are responding. It's very important. Now, again, time frame specific. This is going to challenge you because there's conflict subject to time frame. So we'll try to get into that, but I can't get into all of this, of course. But the other piece, the ETH inventory is short. So what do we have? Look at the logic. Shorts from yesterday, going to zero, Lewis. Shorts in the ETH. And then what happens to, so we have two possibilities. So we have shorts, and buy stops above us, okay? Then we can anticipate a couple of things. We can anticipate if we gap lower that we're going to get some profit taking and then continuation selling or the squeezeteria. That's it. I am very aware to come across the range and take out the late sellers. Why would that happen? Look at the previous couple days. What's the condition of the market? Short. What happens if we run out of sellers? Where are the buyers? It's all the shorts become the buyers, and then you get counter trend traders subject to time frame. Is this making some sense? Hope it makes some sense. Let me know if it makes sense. Yes, no, maybe. If you're in YouTube, please give a like. Ask questions. I'll do my best. It does make, okay, thank you, Skye. All right. And if you're in YouTube and you find this interesting, visit the TraderLab. There's a link down there. There's no cost. If you're not profitable, I can't say this will solve it for you, but stop wasting time, because all we have is our resources, our time and dollars. We don't want to run out of dollars, and all of us will run out of time. So if you're not getting the results and you're trapped in Trader Groundhog Day like I was, this is where you draw the line and put the stake in the ground and say, okay, I paid a lot of tuition. Am I going to keep repeating the class? What have you learned? Right? Okay. Who's trading from a ferry? A boat? And where is that? I can't believe this. We do have traders in TraderLab. We have one trader who actually vacuums and trades, or he drives. He actually has Bookmap running on in his car. I'm a little concerned about that. I'm not sure what to think. Okay. There's going to be levels. They're going to pop back in. They do drop in and out at times. And here's what I'm going to discuss with you today. We're opening out of range in a gap. Is the market responsive? Yes. So but let's go back to, if we're opening lower out of range, there is a 98% probability. Write these down. You have to vet them. 98% probability to take out the first hour's high or low. Now make a note of this one. You'll find this interesting. Approximately a 29%-ish probability to take out the first hour's high and low. So we have a key level at the low of the day, which I'll show you. But if we get under there, then it's continuation. Or we'll come back in and balance out. So let's just see what it does. The overnight volume point of control, which is above us, has about an 80% probability. The ETH low, a 72% probability. The previous high or low, 68% probability. So what does that mean? Do you think we're taking out yesterday's high? No. Well, maybe, but not for me. Could. Right? Everything's possible. But if I have a 68% probability of filling the gap, should I be conscious of that? Here's the other piece. A 65% probability of taking out the first hour's high and about a 65% probability of taking out the first hour's low. And a 30% probability to take out both of them. What else? Previous point of control, 30%, not necessarily on my list. We'll see. Anyway. That's the opening volley. Now, what's not in the quote literature is understanding market mechanics. Most of what you'll see in TraderLab, you're probably not going to see elsewhere. I can't tell you why. Maybe it's out there. I have no idea. There's tons of literature on trading. I haven't really seen what I do out there, which doesn't mean it isn't. But when I started doing this, nobody was doing it. I built this for myself, and I will say regretfully, which I have no control over, I lost years of trying to fix what turned out to be a defective process. The random winners kept me trapped in Trader Groundhog Day. So RTH open 8:30. I'm going to show you some trades, and it doesn't necessarily mean I take these trades. Now you're going to go, what do you mean? I'm going to show you structured trades, and the reason is time frame. So different traders trade different time frames. Now this is a short. I didn't take it. I couldn't. I mean, it went, and for me, when this happens, emotionally, I go a sense of disappointment and FOMO. Like, gee, right? Because it's my trade, except I have to be able to execute it, and this is 5 seconds. So this thing actually set up in 5. I can't react to it. By the time it registers, because I'm human, I'm already here. So I can, 10 seconds is very hard for me, because I have to be aware of where my risk is. You see, so as it's moving away, my risk is going up. I also know, remember the plan, squeeze. Now the problem naturally is where, right? So let's mark this. I thought it was 29. Guys, what was opening swing high? I kind of lost it, I think. I thought it was 29. It was like on the run. I'm going to say 29. Close enough. 28.75. So opening swing high. What's going to be at the opening swing high? You already know this. If I get sellers, continuation sellers, what's the plan? The plan is to be aware of squeeze, to trap late sellers, to get profit taking. We have the gap, and if I get continuation sellers, these guys can become my buyers, right? Because the market is short. That's what I know. So anyway, for me, shorts. That's all I got here. Now, where's that 14? Oh, here it is. This is the target on the downside. Okay. Now, I didn't have anything here. It just ran away from me. I had nothing to do. And this, I didn't have anything here. Often what I'll do is, here's this trade right here. This liquidity is resting. So I look at this, and this is an area I can use right here. But again, it broke away. So it was just frustration, right? FOMO. Are you surprised, by the way? This is resistance. This is important. This is the target. And again, no clue. It was 14.25. No idea. Watch. So, and I'm looking for the squeeze. Now, this is really difficult for me. Now, VWAP, I got mid here, and I got this. So here's what I know. I know right here, watch. Now, I'm only giving you ideas here, guys. These are not trades anybody ought to take. You have to understand what's going on here, which will take you some time. So in TraderLab, the idea of this is that you can begin to understand market mechanics. Let me show you this. Try to get this right where it belongs. Okay, let's look at the microstructure. Let me try to get into this. Open it up so you can see it. I'm just pulling this out so you can see market mechanics. Now remember, ETH low, 98%-ish probability, and then this is the target. So any trades taken, this is where we're trying to go. And then you got this sitting over here too. So you guys just be aware, who knows? Don't know. So look at the microstructure. Liquidity is here. Break under, test. This is a short in TraderLab and VPOC migration. This is more advanced, but this is a short. Let me show you again. In here, so I have buyers here. That's the limit order book. Icebergs, most likely. Who knows? Notice there's 1,000 right there. That's nice. Resistance. This is called VPOC migration. This is a specific trade condition that I've shared in TraderLab. It took me a lot of time to figure out what was going on. In fact, early on when I was doing this, just as a side note, I got criticized by the purists. That's where I kind of figured out that I was on the right track because I was thinking differently. And of course, I had to prove it to myself. That took a lot of work. But, and for me, again, this might not be appropriate for other traders naturally. So this is resistance. The location of the volume here, this is a microstructure. So what do we have here? I've got buyers here. I've got sellers here. When I break low, this is shopping. I have these guys are underwater, these buyers. I get below them. If I don't get above here, I can sell this. I also had my buyers there. That's the absorption. You see how it fits? And then I get below. I come back. My sellers are there. My buyers are here. My sellers are here. I got alignment. I have alignment. I break low. I can sell any of this in here. My stop will go above this. Not a recommendation. Let's look at the behavior. Where is my resistance? What happened here? Buyers are there. Sellers are there. Sellers are there. Trigger. Now, where's the last place my buyers were in control? It's there and there. Right there. So right here, if I come back, and here's the VWAP, which, subject to how you want to use that. It's just a piece. This is a short, so I can sell this. Now, here's the other thing I know. I know this is a target. So if I take a short, I'm only trying to come down to test this area. Okay? So I could go short there or short here. Now, this right here is called a variable high volume node. Let's look at what it does, how it works. That yellow line is where the highest developing volume is for the day. As I go down in time frame, inside of this is the same thing. This is high volume. If I leave it, then it's too high. It's too high. If I come down to this high volume, which is left behind from the last time I was here, and there's no precision, it might be too low. Right? And here's something else. When I break above the naked volume point of control, which is where? Watch. It might be too low. So I have too high, too low. If it's too low, then where was the last place? It was too high. It's here. This is resistance. I get VPOC migration right here. Here's the possibilities. Up, down. I know every time I say this, your eyes roll back in your head. I understand. So this is too high. New retail price. What happens here? If I don't break this way, then what? Where's the last place it was too high? It's right there. Watch. This becomes resistance, and this is also, watch. Now, what I'm sharing with you is a process, not mechanical. What I found for me is it's an alignment thing. It's not a prediction. I don't know what it's going to do. Do you? So if I don't know, I'm no longer in this thing being right and knowing. I'm actually in the business of knowing I don't know. So then I'm in the business of alignment. Now let's come back to this. Too high, Too high? Too high. But what's the issue? Opening swing high. Now let's consider the plan. What's the plan for today? Continuation selling. Buy stops are in here, and then buy stops are all the way up the financial food chain, and there's a gap. So that's where our potential squeeze comes in. Okay? Does that make sense? There's only one gap that's filled 47.11. And that's yesterday's low. So this is where the stops are. So when we came up here, this looks like a short, right? I can't take it. But what is this? What is this? What is this? The old saying, resistance can become support. Let's look at similar behavior. Down under here, this becomes resistance. Break high, what does it become? Support. Now let's go down in time frame. What's this? Same thing. It's resistance. Break low? No. What does it become? Support. Then what? What about this up here where the variable high volume node is? I made it up, who knows? Because it was too high. Well, if this is too low and this is too low, then what might we be setting up? Maybe the squeeze. When I break above here, in my mind, it's the squeeze area. Now, this is where things get strange. And what that is what do I know? I got buy stops above the opening swing high, and I have shorts. So now I'm in there's two choices. I have to give you what they are because different traders have different time frames. You could be taking longs for the squeeze, or you can be waiting and trading in alignment with the higher time frame. You say, which is right? Now, here's the answer to right. There is no right. There is no wrong. The only thing that's right or wrong is your plan in following it, not the outcome of the trade. All you have to know what you will do. And it doesn't matter really what happens. You're going to say, well, of course it does. I need to be profitable. No, it doesn't. What matters is you only take trades that have edge. So you're just waiting. All the work is done outside here. All we do in TraderLab, and this is where the work is, and most retail traders are really hung up on dopamine and playing a video game. They're not really in this business, to stay in the business. That need to be active is part of the problem. And if you don't recognize it, you're already on your way out the door. These are the things you have to learn about yourself and about why most retail traders fail. They don't do the work, they just want to push the button. That's a path out the door. Just saying, Why would I say that? I've just seen it over and over and over again. And I've trained a lot of traders over the years. Those who don't have self-control or emotional control will go out of business because that's going to be the biggest obstacle. It's been said, and a lot of this information is in TraderLab, and there's no cost again for that. It's been said that most traders put about 90% of their energy into setups. Well, the reality is the setups or the trades are only about 10%, according, to, you'll see this if you do some study. So if we're spending 90% on what was only important 10% of it, then what's the other part? It's the psychology. And that's the last thing traders are interested in because they want to push the button. They don't want to understand the business, which are you. So this is support. Let's take a look at it. So I'm going to mark it. Remember what I do. I just follow I just kind of float along and I have process because I am in randomness. So what cannot be random? What do? Market's random. Casinos, I always like to use the casino analogy because that's really the business we're in. See this? Where is it? See it? Why did the market come down here? Oh, I can't tell you why it did, but I can tell you why it might, because the market is looking to see, is this level too low? And again, higher time frame, just so you know where this is all coming from, because I align, it's right there. That's the target. So what I know is if I find a level, and we don't know, could have been this one, not my job. If I come to a level and it's too low, this is shopping. At one point, way back, I'm not going to scrunch this chart back to show you, but it might have been September or something, 2025, this was too low. How does the market work? It's a pricing mechanism. Is this really too low? Well, if it is, I can come across that range and do the squeeze to rebalance the inventory. The shorts from this morning become the buyers. Then if I come up here and I fill the gap, 67% probability, and I don't continue to squeeze, and we can continue to squeeze, doesn't matter, then the possibility is to get there. Isn't that the same? That's the high volume from yesterday. So I got high volume here, and I had high volume here. What did we do? We're under it. If I get under it, then it's too high, but I have the gap. You see? So I know about that. I don't know what it's going to do. So let's get over it. I mean, if you know what it's going to do, I want you to come to TraderLab and clue me in. I've kind of moved away from this needing to know being right, because somehow that's never worked. Predicting. It's going to do this, it's going to do that. I don't know what it's going to do. What I know is what it might do. And as long as I know what it might do, I anticipate. And there's a saying I coined for myself, and I share in TraderLab. It's called, you got to anticipate to participate. So when we approach levels that are based on a methodology that is proven, and the methodology is, what's the basis? Why do we have a market? It's to figure out what's too high, what's too low, what's fair. And it does it in all time frames as you think of them, or rotations. So as a trader or a day trader or even a swing trader, you are basing your business plan on the time frame you trade. Okay? You guys with me? So, too low, VPOC migration. Notice where this is. Let's come back. Variable high volume node. Going to throw a little line here. So, what do I have here? I have, this is support, break low, too high, resistance, support, break low, support, resistance. Just watch the behavior. Support, absorption, resistance, support, resistance, 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 support, VPOC migration, resistance, resistance, break high, resistance, warning Will Robinson moment, break low, support, break high. Now, right here, what did we do? Come on back. Well, is this important? Watch. I really wish I could go faster. I really would like to. So, what do I know? I know this is important. You see how it worked? It was resistance, we broke high, it became support, microstructure, support. Now on the opposite side, I've got resistance over here. So you can take these structures and you can extrapolate where the sellers are. Now with order flow, of course, you can see them. And then I can see over here. Now I don't know what it's going to do. What I do, and I'm not saying it's a good idea, is I look at where the opposite side thought there was a deal. In other words, here, got to get these, I'm slipping up. What is this? This is resistance. You see it? I'm not paying that, and then we move down. Well, if I find too low, where can I come back? I can come back here. Now, if I cross above here, this is too low. This is resistance. You can see it. Break high, where's my next location? If I see absorption here, and this is a trigger, just giving you examples, guys. These aren't necessarily trades. It's time frame based. This is a trigger. You could be shorting this right here or there or there. And what you're trying to do is come here, there. So, if it's your trade. And if I don't get below here, then what? Squeezeteria. Where were my sellers? They were up there. What can I do with this? There's my sellers. There's microstructure. There's where the buyers were last. See how they had the buyers here? I really want to move on, but I always feel compelled to help you see behavior. So what do I have here? I got my sellers. You see the icebergs. I have a seller up here. Who knows? And I have why is the market going up right here? This is why. Buyers right there. That's what gives me that. But what's this? Sellers. So I got the selling icebergs taking the other side of the buyers. All right. Well, that's nice. Where are the buyers? Here. Now I'm going to draw you a little microstructure. Let me move this out a little bit. Okay, I want to isolate this. So this is a level. Who knows? And I've got chop, chop, chop. Buyers, buyers, buyers. I'm under the buyers. Don't know. Except location, location. Think real estate. Now, the problem naturally is stops are here. But I'm going to show you that. I'm just showing you behavior, okay? So I don't have a trade here. I'm just showing you, but I'm showing you the structure because why? Buy stops over the opening swing high. So I can do nothing except look for a short, and I don't have any long. So I'm sitting here and, going, well, so where might I find my sellers? Well, let's look. So this, if I'm taking a short, and these are very aggressive, these, again, I'm looking for a squeeze and a gap fill, 67%. So if I'm taking trades, I know I'm very vulnerable. But I'm just going to show you structure. This is resting liquidity. There's my sellers. If I break below it, I can use it, if I chose, to get short against it. And where am I trying to go? There. Just saying. So depending on your time frame, you're rocking and rolling here. Now, this was 46. This is let me make sure I got this right. This one. I think it's 46. Can't tell. 44, 40. It might be off a little bit. This is potential resistance. So the way it works is if this is too low, if we come back here, we might rotate. If I get above this, I got the gap. If I get in the range, then I have the overnight volume point of control, and I have this. No idea. Again, clueless, not ignorant. All trading is, at least for me, is an alignment business. If I sell this, I'm going here. That's all I can tell you. But now I have that level, naked volume point of control, the 46-ish. And I have, I think at the time, maybe full session. I don't know if this is accurate, if we had full session VWAP. Guys, is this accurate? Full session VWAP was up here at the time. This is about before the report at 9 a.m. So let's keep going. This is the gap fill, okay? So remember, responsive buyers, right? The responders are who? New longs coming in, counter trend trader, all fine, subject to time frame. One trader might be long because that's the traders. While it might be my counter trend trade, it might be their trend. You see, because that's a time frame thing. So I'm looking for shorts. And primarily, for this conversation, I'm only taking shorts for the day. Other traders are long and having a wonderful time. What's the right thing to do? Remember, the answer is in your trade plan. That's where it is. Observe this. This is an advanced process I'm going to show you right here. Just something to think about. Um, nothing is mechanical, but it is behavioral. Let's look at this. What was this? Let's see if we can figure that out. Here, here, this is support, break low, becomes resistance. It could be a short or nothing. Now, let's look up back over here. Variable high volume node right here. I think I lost my place. Yeah, I did. Hold on. So we're looking for it to fill the gap. Now, this is where patience and discipline really is important. So again, I was looking for it to get into this. All right. Once I'm in here, then I'm looking to fade it if I don't get more buyers. I do know that if we can't get into yesterday's range, then all we did was rebalance and I'm going to take short. So I'm just saying that's what I did. I'm not saying it's a good idea. It's just what I did. And I have no problem with it. So my goal, and I'm just, again, it's very specific to me. It is not, quote, the right thing to do. You will find the right thing to do for you that is based on your time frame. It's very important. Let's watch. So here's what I know. I have liquidity here, but I haven't filled the gap yet. So my FOMO is telling me, because I'm reading a short here, okay? I have liquidity, I have absorption. I'm looking at this and I see, where did it come? Back to my support, okay? I have a sweep here. This is a tool in Bookmap. It's very good, very important. Now, right away you're going to say, oh, does that tell me to get long? No, it doesn't. What it tells you is, right here, there might be a counter rotation, and stressing the word maybe. Okay, everybody with me? So, potential counter rotation. Where's my liquidity resting? It's here. Right here. Not here. There. Now I closed the gap and I'm looking, and let's look at the icebergs are here. Break low. This is a trigger for me. Not saying it's any good, just saying it is what it is. If I sell this, this is my retail price. So this is called mean reversion. You'll notice, and this is VPOC migration. So what does it say? Let's look at the language. What it says is, this is the new retail price. It's moving up. That says everything below me is too low. Does that mean I shouldn't be taking shorts? Maybe. But I align with the higher time frame. And I am different than you. So don't take this as, quote, the right way to do anything. I have found for me that if I'm in a random distribution, in other words, it's random, all right? I don't know. Do you know? I don't know. So if I accept randomness, not being right, not knowing, then what I'm doing is I'm sampling the market. I'm not in this, am I going to be right or wrong? Am I going to take a stop? I better be sure. That all has to go out the window. It has nothing to do with this business. So what I know, here's what I know. I know I can put a trade on and take a stop, right? So I know that. I know that it could come through here and go up here. The overnight volume point of control, which is the retail price from the last auction, which is the ETH, has about an 80% probability. Does that make my teeth chatter? Yes, but that's my fear. What about my plan? My plan says get short. Okay, from where? Good luck with that. Are you guys following me? Good luck. I'm sorry, I'm getting a question. The full session VWAP at 9? Was it not a short? No, it was not a short. Why? Why wouldn't it be a short? I mean, think about why it might not be a short. Here's why it might not be a short. 67% probability to fill the gap and squeeze inside, 80% probability to go there. That's why. So I'm not mechanical at all. I'm in, remember, behavioral number one, market mechanics. Good question. Okay, Bauer, right? We good? So I can't do this. I can look at it and I can say, well, I'll get a reaction off it. I mean, I could sell it, but I can't sell against the 67% probability. And I'm only in my mind rebalancing. It's not a long. Ethan, I think I just answered your question why over here this is not a short. This is a short for me because what I'm looking at is I have the liquidity. So I have these guys, but I haven't filled the gap. Is everybody understanding the gap and 67% probability? And the inventory is short, like short yesterday, short ETH, short early sellers. What is the condition of the market? Short. What's in the market? Buy stops. Where's the fuel? The stops. Okay? Short. To there. This is called mean reversion. Underline the term mean. And what happens if I take a stop? I wait for the next trade. We got to get over it. What is a stop? Right, wrong? That's how you think of it. It's not what it is. It's a probe of a random sample of market. It's a random distribution of outcomes. Anyway, this is a short to there and then hold. Now, let's come back. Where might our support be? Let's go try to figure this out. Well, that's not going to figure it out. Anyway, this is the short. So where am I trying to go with this thing? Let's look. So I only took shorts. I'm not saying it's a good idea. That's me. I'm more of a Barca lounger kind of guy. I trade this stuff. I'm not I mean, if I probe the market, my job's to get risk neutral. In the TraderLab, you would learn trade management and risk management. The way that happens is you start with a two-lot configuration. Doesn't mean you trade two. What it means is you have to see if you have a positive expectancy. That means better than 50-50 of getting risk neutral. Risk neutral is the first contract. The job of the first contract is to pay for the stop on the second one. Why would I not go for more? Because that's FOMO. That has nothing to do with the business. This is a business of risk management. And think about it, if you have a positive expectancy to buy the stop on the runner, the worst that will happen then, most likely, is you'll scratch the trade and your broker sends you a gift basket. So other than that, you are buying your stop and you're reducing. So it's not an all or nothing thing. It becomes a neutral thing where the worst that happens is it's a scratch. And then we're not discussing trade management or any of those other elements. I'm talking raw statistical probabilities. What does that do for you psychologically when you're trying to manage your fear? If you have no metrics, all you have is emotion, which means fear, FOMO, all this. If you have something tangible, does that give you something to control your impulses and the chemicals being released in your brain, fight and flight and the rest of it? We all have to deal with it. Oh, I did. Oh, okay. Great. About that full session VWAP. All right, thank you. So this is a short, and the idea of this is to come across, and let's look at where the support is. And where does it come from? What's this? Variable high volume node. Look at the magic. And to me, it's not magic. It's just a thing that's beautiful. So maybe I'm a little biased. It's beautiful because it's right in front of you. And most traders have no idea, absolutely no idea of how the market works. Let's go to the financial store together. This was the retail price. It was right there. Okay. And it was too low. And now the retail price is above us. If the market comes back to a previous price, think of shopping. It's so simple. Trading is not complicated, guys, but it's random. So that's the piece. If this was too low, it's a target. It's a target. So for me, the shorts from up top and then trade management. And I don't know, I said, now look, there's VWAP in mid. Why wouldn't you buy the mid or the VWAP? You could. What will happen? You'll take a stop. If I bought this, I'd take a stop. But what did we do? We filled the gap. What's the higher time frame? Down. And again, it's time frame. So as I'm starting to say, I trade less, and the reason is I trade larger rotations. Why would I trade less? Because every time I put risk on, right, the more risk I take, the more stops I'm going to take. Logical. So what I decided what I found, and it's all based on metrics, and again, it's me, my psychological alignment. What I found for me is take the trades, take the stop, of course, but if my stops are a couple of points, whatever that it is, and I'm working 20, 30 point rotations, I can probe the market and still have a very nice day. If I get into very short scalpy stuff, now my risk and my reward is somewhat balanced. It doesn't work. It'll put me out of business with cost, losses, and over trading. And it stimulates the emotions. So what I found for me is I can afford to be patient and manage FOMO because I know where I'm going to trade. I don't know what's going to happen. So you want to be right, wrong business. The right is not the outcome of a random distribution. It's the plan. The end of the day, it's what here. So anyway, this is a target, wherever it was down below. The variable high volume node. This should be listed out here, wherever it went. Yeah, there. Okay. So what happens? If I come outside, I can sell this. I can sell it. And I got this right here. So I know about this. If I break above it, I can sell it. And where's my stop going to go? Now, this is the toughie, right? What's our nature? Micromanage. Oh, I don't want to lose more than I have to. Have you ever thought about that when you are working from a state of fear, which is what it is, I don't want to lose more. What does that mean? The psychology is to avoid pain in the saber-toothed tiger. It's all the same, right? So when you take stops, you experience pain. Now you're conditioning your response to the anticipation of pain. It's no different if we were out on the savannah and what's behind the tree or the rock. We want to avoid pain. Is there a saber-toothed tiger? So our primal wiring is to avoid pain. So once you're conditioned, which we certainly have pain in this business, which is loss, our primal wiring cannot differentiate between a saber-toothed tiger and this, because this is uncertain. Same as the tree, same as the saber-toothed tiger, so it's going to protect you. How does it protect you? Fear. So then what do you want? Certainty, right? What does that set up? Fear, you don't act when it's to your advantage. FOMO is where you sell it here, because now you're sure. Here's a question for this astute group of traders. Has being sure changed the outcome of any unique trade from taking it here or taking it there? Does that increase the probability of getting profitable with how much more risk? You see what I'm saying? My stop, not a recommendation. You have to vet this, goes there. Why? I've already got sellers hanging out in here. So they might, if they stay in the book, and everybody else can see them if they have a high tier order flow tool like Bookmap. We all know the sellers are sitting here. Well, if I know I got sellers there and I have retail buy stops above this swing, I'm going there. Now you got to find out if that gives you an edge or if you just take bigger losses over a random distribution of outcomes. For me, and I'm always going to say not a recommendation, I don't put my trade with the other trade. I don't put my stop with other traders. Why would I do that? I built trading systems to trade into those stops. Why would I join them if they're fuel? Remember, fuel. What's the condition to the market? Short. Why did we go up? Fuel. What happens if we burn that fuel off because the trend is down? What do we do then? Tom sells. Other traders in TraderLab buy. Who's right? Both. See? This is the dilemma. Everybody says, what's the right thing to do? Well, I don't know. What's the right thing for you? It's not going to be avoid losses, so that's not part of this. So then how do you work with this? I take the losses, I take the stops, other than how I emotionally respond to it, which is usually, words. I wouldn't have children in the room sometimes, but I'm pretty, used to that. I just go, that's interesting. I mean, that's exactly how I see it. I go, that was interesting. Huh. Well, now what? Where's the next location? Because I know what I'm trying to do is I'm trying to find exhaustion. And picking a high of anything, not my skill. It's not yours either. Occasionally we fall over the high and low, but that has nothing to do with skill. That's luck. Skill is understanding. Anytime you put a trade on, you can take a stop. Okay. The other thing is developing an understanding of how the market works and not doing what other retail traders do, right? What do? They sell in the hole. They go for the sure thing. We don't have a sure thing. Remember, we have 67% probability there, 80% probability there, and who knows, right? So anyway, this is the short. This is a short. This is your protection, and then you're trying to come across. Okay? It's called mean reversion. And I always say, yeah, it's mean. And where are we trying to go? Well, I got resting liquidity here. I got to see what happens over here. Let's just see what it does. I don't know. And then you manage the trade, right? Here, let me take you another place. Some of this is more advanced, and I'm almost thinking I should just jump ahead and start reading this thing in real time for you. Notice what's over here. This comes in. Absorption, iceberg. Those are the buyers, right? What am I anticipating? Up. Where's my resistance? Here. I got to label this. Why? Why is this important? This right here is the retail price. I'm going to show you this. I'm in multiple time frames, right? Right. Isn't this confusing? Yeah, it is. Why? Because it has to be organized, and it's a if this, then that, if not, then what. If this is too high, it's resistance. If this becomes too low, no clue, it's resistance. It's resistance. If I break above it, it can act as support. If it's support, I can come up here or there. Right? So if I take the stops out, and this is resistance, and I break, and I test, and I got this, I can sell it. Where am I trying to go? There and there. And then if I break low, let's see what happens here. This is resistance. This is support. So I got resistance, support, break high. Then I am out of it, or I can trade manage. Now here's the question. In a time frame specific trade, you're either managing with a process you've vetted, or you're hanging out and you're going to let it rotate subject to time frame. What is this setup over here, Tom? Let's look. Again, I'm getting into some things that are a little strange. Watch. So I got this. Watch. Let me extend this. I want to show you. This. There's no secret sauce. You know what I'm saying? Everything you're seeing, you can learn in TraderLab, and it's not put all these pieces together and become as they say, whirling dervish. No offense to the dervishes, but support, resistance, test, resistance, break low. What's here? Resistance becomes support. Resistance, no clue. Resistance, break low. Where's resistance? There, there, there. What can I do with this? I can sell it. See? Didn't even see where we are. Now we're in real time. Uh, what I was starting to tell you about was rotational trading. Everybody kind of slices this up. It's kind of like I don't know, an onion. You know, it's inside itself. So all of these things are rotating inside of themselves. I always try to equate this to Matrushka dolls. You know, a vertical integration. You know, in a Matrushka, those Russian dolls. Well, they're inside each other. So time frame is inside. So when I'm trading rotations, this is what I do. I just trade this stuff. You know, I mean, a 30-point trade or so. How many of those do you need to be profitable? The 30 points or 20, and it's not up to me. It's what the market offers. We're in a high rotation, a high volatility, a high rotational range environment. It's great for day traders. When things compress and it gets tight, our risk doesn't change, but our opportunity changes. You see, so in this environment, I can just be taking shorts, short, short. This is my trade. If I wasn't streaming, I'd be on this thing. And where am I trying to go? From there to there. Mean reversion. Mean. Now what? What do I know? My buyers are sitting here. So now what I want to do is manage my trade. And if this is the fair price, so this is reversion trading, and it's the primary behavior of the market. Now, just to scramble your brain, because you didn't think you came to TraderLab just to not get your brain scrambled, I want to show you something. Watch. What is this? Isn't this too low? Maybe the low of the day, maybe not. When I come back here, what am I doing? Mean reversion. When I returned to here, what is that? Lost it. Here. Mean reversion. And all time frames, as you think of it, mean reversion. So when I'm trading to the mean in multiple time frames. Inside of this is a mean in a microstructure, and it looks like that. So in a small time frame, as you think of them, right? I don't use time. There's no time here, by the way. It's structure and order flow. So I know I got my sellers here. There they are. And if I get my buyers, which are stops, you can see them with the stop and iceberg detector, and I run out of buyers. Who are the buyers, Tom? Are they initiators or are they shorts being squeezed? This is the ultimate question, isn't it, in your time frame? For me, I want to sell it. Get the drool off the table. I want to sell it. Now, the thing is, it can keep going up. Why? 80% probability to go there. 30% probability to go there ish, not recommendations. So what I know is I pick a side, and if it changes, then that's that, I worry about it. So I can sell that, I can sell this. And these are all called reversion. So what I'm doing is I'm using the same concept in Matrushka dolls. I'm trading inside these multiple time frames using the same process. So if I sell this in a short time frame, which is that little high volume, it's the same as coming back to this high volume. So I'm going too high in this structure back to the daily developing time frame, higher time frame. That might be too low. So if I trade a short, I'm only going here, and then for scaling, and then it's either out the bottom or whatever it does. And if it takes me out or on my trade management, which is an individual thing based on your plan, I get taken out and I go, oh, that was good. I follow my plan. So what? Next. And again, I am conscious that I have an 80% probability. You see? So that doesn't change me taking shorts. It just puts me on my trades, and whatever it does, doesn't matter. Other traders in TraderLab are going to be using these outside rotations for longs. And here's the answer. What's right? If I was long, I'd be going there to there, which would be here. I already know where it is. I don't know what it'll do. I don't know anything. So if I come here, I can trade back to there and maybe back here. If I don't get below here, it tells me maybe too low. So this was too high. This is fair. If fair is now too low, where am I going to come back? I'm going to come back and squeeze these sellers. That's it. I don't need to know any more than that. Other traders are going to be taking the longs. I just take one side. I don't care. It's just me. Now remember, 80% probability, 30% probability. And probabilities don't mean absolutes. They're just maybe. So for me, if I'm seeing, and this is really right here, this is the key, too low. Then I have a sweep here, and this says potentially too low. So I have too low, maybe too low. I don't know. Don't forget. Hindsight, very clear. So if I'm selling this, I'm going here. If I'm a long, I'd be buying this, going there, and then coming here. This says potentially trouble. We have to pay attention. Where's my resistance? Tell me that you can't organize information. Now, the thing is, what I'm trying to do is extend this out. It's not working. This is resistance. Maybe. What do you think? So if I know I have these sellers and there was the absorption, if I come back over here, might I get the sellers again? There's sellers. Now, there's no precision. So, but now here's the problem, and it's not really a problem, it's a challenge. My range is to go there for mean reversion, you see. I don't put this trade on. Well, I could, but I prefer to put it on a little further out, and I'm going here. That's the objective. Doesn't mean it'll do it. This is mean reversion. I have to be very careful because of what we just did. What we did was we found our buyers, see? So selling this is, has a bit of indigestion involved. But if I did get in here, in this area, I can get squeezed out because of this. So right now, the potential is to come here. That's all I can tell you. It's not a trade recommendation. You'll notice we're making higher highs, right? And the sellers, this is the part that right here says trouble, maybe. So, two possibilities. Up, I know you like this one, up or down. So if I'm taking the shorts, this is where I'm trying to go. And the buyers are here. You see the sell delta? Why isn't it going down when you see sellers? Because there's buyers here. Look at the behavior here. The buyers are there. See the delta? Buyers, break high. That's a trigger right there. That's support. The buyers are here. I get a sweep here, fair price. I get a sweep here saying counter rotation. I hold this. I squeeze further. I find my sellers. I see my seller under my buyers. I have my buyers here. My sellers absorb those guys. I break. All of these are shorts. This is the target for the scale. And either it goes down or whatever it does, it does. If I come back up here, do I get my sellers? If I do, I can come back here, right? If I come back here, then I have my buyers with their sell stops under here and there. See? So, and these are not trade recommendations. I'm just trying to give you a sense of market mechanics. So subject to time frame and behavior, you could be selling this thing, you could be, or in your Barca lounge, you're not doing anything. Or See, here's the or you're buying it here. See, which one? This is the dilemma, among other things. The dilemma is designing a plan that's like your groove. Ever hear the term your groove, your psychological alignment, your rhythm? I look at this and I kind of try to think of it like dancing or music or language. I'm not using indicators. I am using measurements, measurement of volume. That's not too complicated. And the reason volume is so important is look up here. One contract went off. Is that price equal to this price with 10,000 contracts? What does one contract tell you at the high of the day? What is that? Does that tell you that is that price the same as 10,000 contracts? What does it say? Have you ever gone shopping and the price is too high? Somebody buys it, and it could be just a stop. We don't know. Why are we not going higher so far? Because we ran out of buyers. If I run out of buyers, where might I come back? To where it's fair, right there. So if I am taking shorts for whatever reason in my plan, I know not what will happen. I know I found too high currently. So what do I do with that? Me, sell. Other traders will buy. Isn't this a kind of a beautiful thing? What do you guys think? How you doing in YouTube? Ponder this for a moment. And please give a like if you're getting something from this. It encourages me to keep doing this. There's no cost for TraderLab. I'm not a vendor, and it isn't about me. This is about the TraderLab community. I'm just sort of a guide. I'm here to guide you and share my experience in the tuition. You might be able to skip what I had to go through to do this. And this is not plug and play, which is we all like. I know. I'd like plug and play too, believe me. I read all the books, and back when I started, we didn't have computers or internet, so I had to do it manually, everything by hand. So it was really very inefficient, okay? And also, I had no information. All I had was buy a book. That didn't work out so good. How you guys doing with all those books? So I had to learn the hard way, but the learning curve was very steep, and I never understood the business for what it actually is, which is gaming. Nobody talked about it. All my friends were floor traders. There weren't off-floor traders, really. The technology didn't exist. So I sat, in front of a quote machine, and initially, I was one of the machine, if you will, it was CQG. I eventually got a CQG, and it actually had multiple time frames on it. What an exciting thing. I also learned about oscillators when they first really came out into the retail space. That was very exciting because I thought, oh, there it is, the line crossed over. Yeah, we've all done it. We've all been there. Now, the problem with every tool you use is the random winners. So you just go on this quest of making it better. Here's the thing, and this will answer the question for you. Why are there 150, 200 indicators in your software toolbox? Here's why. They all work randomly, and I'm going to step out on a limb and say none of them have an edge. So that means random winners, and then our tendency is to put more of these indicators together. So what you're doing is you're putting randomness in. Think random inputs in a random environment. So there's nothing consistent in any of this. So what I ended up doing, and I learned this really more from trading systems. Here, how we doing with this thing? Well, this is still a short. Nothing's changed here, right? Are you guys with me? Can you see why it's not about right, wrong, or trading, quote, the right side? It's about trading the side with edge for you in your plan. Is this making some sense? Furs is asking me when would my plan change to long. Uh, I don't have that in my plan for today. And it doesn't mean we won't take the high of the day out and go to that overnight volume point of control 80%. I'm just trading one side. So I just kind of pick a side and I'll take my stops with everybody else. Welcome to trading. And as long as it fits my plan, I pick a side. When I'm seeing these rotations up, I'm not seeing them as initiators. I'm seeing them as short-term traders and squeezes. And I understand that we're in a rotational trade and that the higher time frame, here's the thing, and this is very specific to the individual. I want to keep stressing this because it's not like there's one way to do this. For me, I'm only trading the shorts. Higher time frame is down. Let me ask you a question. Do you want to own stocks or do you want to use counter rotations? Assuming now you're a hedge fund or a bank or a portfolio manager, what are you doing here? Are you using these rotations to unload inventory? What do you need to unload inventory? You need the other side. So if I'm going to sell, what do I need? Buyers. Who are the buyers? Well, short-term traders. That's fine. More power to them. I'm a short-term trader. I need the stops because the stops are the liquidity. So if I see my sellers here, and this is where the heat map comes in, and I have the stop and iceberg detector, so I'm going, oh, okay. Now, if I don't have the iceberg detector, I can extrapolate the potential. But I want to, when I see this, there is a difference between seeing 1,000 icebergs going off here. Isn't there? Is it nice to know there's 1,000 icebergs? Now remember, what is an iceberg? You're not seeing the whole enchilada here. An iceberg, you see the tip, right? They don't have to show. They have to show a percentage. So what is this telling me? I got some motivated sellers. Is that useful information? Where are these sellers? I can sell this. I can sell. And where am I going? What was the trade? I don't call trades. I'm just giving you a little thought. There. And if I get under there, where am I going? Let's come back. Where were my stops? Remember? Review the stream. There and there. Buyers. There's the icebergs. Okay. Well, what about retail traders? What's under the swing? Sell stops, right? So what I do is I'm always thinking from both sides. Who's vulnerable? And it doesn't matter if we go to the moon. For me, I'm just going to stick with one side. And can I be profitable doing that, even if the market takes out this high and keeps going? Yeah, because I have an edge. Right? Furs, isn't that an interesting thought? You're asking me when would I change? I wouldn't change. I would just stand aside. So if we squeeze up outside of the current range, then I'm going, oh, that's nice. And I don't have a trade. I'm staying with what I perceive to be the dominant side. So even though we can end up going up and keep going, go to the moon, peace breaks out, which would be an event. If it changed, I either have trades that align with in my time frame, and I will take them and take my risk, or if the condition changes and I don't have a qualified vetted trade, I don't have a trade. I just sit here. I'm a tourist. Does that make sense? Hero, you're asking me about the large icebergs. Um, I really don't know what they're doing. What I know is a priority of inputs. So for me, it's important for me to observe the liquidity and the behavior. That's what's important because we don't know what liquidity is going to do. Like this guy right here. Let's look at this liquidity. What's this doing over here? This is how I perceive it, not saying it is what it is. Why did this come in here? Do these guys want to sell? Do you think? How about this? They want to skew the book. This is kind of like, I always think of this like a hand coming down, pressure. And what happens with these algos down here? What are they going to do? Well, an algo's an algo. We can't do anything with an algo. We just look at it and it's noise. We're in a different business. This is the same thing as when we used to have floor traders. You can't trade against those guys, right? So this has replaced the guys down on the floor. And where's my support? Isn't it here? So when I'm trading this stuff, I'm just taking the trades and I manage them, and whatever it does, it does. What is this called? This is the primary condition that I suggest all traders who come to TraderLab and want to build out the business, and you have to vet everything for yourself. It's called mean reversion. Mean reversion. Reversion. Where were my buyers? Well, sellers were here. Sellers are here, you see. Break high. All right. This becomes support. What about down here? I had my buyers here. And there's a sweep. It's also support. Do I know where it's going? I have no idea. So what would I do? Well, if I'm selling this, or I'm selling this, or I'm selling any of these, I'm just trading the rotations. This is what's called day trading, Now, how about you guys who trade options or are swing traders? Do you realize, because of Matryoshka doll concept, vertical integration of time frames, it's the same thing. You're just pulling the lens out. But the process of triggers, trade management, let me show you in a higher time frame. This is just to give you a little perspective, because I know and by the way, stocks, ETFs, whatever. Where was the last place it was too high in a higher intermediate time frame? You could be sitting short from there. This is a trade. This is our target coming up. And this was the short. So if you're trading, let's say and this is not a recommendation, you're trading an ETF or any of that, this is your shorts. You could just be hanging out here and have all this and never lift, or buy puts up here if you want to do that, with limited risk. Or understand this and buy expiring options where you have tremendous leverage. I used to do that. I used to use this process, and I would buy out of the money, let's just say puts, and this is before we had the daily ones. We just had the regular options, if you will, and I'd put these things on going into expiration. I would trade expiration week. Different conversation. But I built all kinds of stuff off of this in different time frames or longer term options. And I don't want to write. I don't want that risk. I would buy them. And at times with the leverage, I had less risk on the options than buying them, expiring options, that I did with the futures. And when I have more leverage, just another conversation. Anyway, guys, I'm out of time. Hope you got something from this. Please give a like if you're visiting in YouTube. Don't forget there's 60 PDFs of structured trades that you can download in the TraderLab. Looks like this. It's not plug and play. You got to reverse engineer them, and you really got to learn what this is all about. There's a library of webinars, the document section, and a lot of great information and good traders who are developing just like all of us. I'm developing trader too. 47 years doesn't stop me from trying to get better, because being human, we're all imperfect. The thing to do is understand your humanity, your weaknesses, and buttress those weaknesses with structure, vetted trade plans, and then develop the discipline to disconnect from the outcome of each individual interaction, but look at it more globally as a random distribution of probabilities. And if it works for the casinos, then maybe it'll work for you. Please give a like on the way out. Thanks again for visiting TraderLab today. Use the link in the bottom of YouTube. There's no cost for the lab, and I look forward to meeting you there. Thanks again, guys. Have a super day, and thanks for visiting the TraderLab.